Good afternoon, everybody. Welcome to today's live stream. We want to witness today the release of the so-called non-farm payrolls. That is actually a little bit of fancy wording for US job market data. And for sure, this is going to have a great impact again on the market, especially if the number that is coming out is going to deviate largely to the north or south from what the market is forecasting, what the market is expecting. And yeah, we want to see not only how the number is, we want also, of course, to discuss about the impact here. What does the number mean in the context of what we can still expect from the Federal Reserve Bank for the rest of 2023? Let's see, depending also, of course, on how the number is going to be, we are going to maybe do a little bit of trading also. I can see already plenty of people here in the stream. I can see Mukhtar Ali, I can see Game, Elko and Casa, Catch is there, Jeps, Rebecca, De La Serna is there. We have Kerry here, we have Adamson, we have Joseph, RTU. I also saw Batu, of course. I saw Diego. Hello, everybody. How are you guys doing? Happy to see everybody here again. And yeah, let's see what we can do here today. So for anybody joining this for the first time, welcome. Also, my name is Dirk Hartig. I'm the head of trading education here at Prime XPT. I'm also a professional trader. I've been a trader for 25 years in the institutional sphere. And my mission here is, as always, to kind of decipher the markets for you a little bit on a more, let's say, professional level. So you don't maybe, go in all those little traps that linger out there when you start trading. All right. So we still have some time, obviously, left. Still 27 minutes until the numbers are released. So plenty of time to talk about some stuff. First of all, I want to make my screen big here so you can see it better. And again, of course, I have this one a little bit little, so I'm going to make this a bit bigger so you can see better. Yeah, like this. So we are going to take the time here, of course, to not only talk about what to expect from the numbers and what is going to happen if the numbers greatly deviate from what is expected. I also want to take the opportunity to catch up with some charts that we were actually talking about on Tuesday on Bulls, Bears, and Breakfast. And yeah, let's start here right away with Bitcoin. Oh, by the way, before I forget this, before I go into the charts, of course, leave us a like and subscribe to the channel. Very much appreciated. And we have a brand new promo code also for you guys here for the global markets called Bulltober, if I'm not mistaken. Yes, correct, which is going to give you a fee discount of 50%. This is valid for October. So you might want to use this code actually if you are planning on trading today, if you're planning on trading a little bit the next days. I want to put also here some money onto this account. Otherwise, it's the promo code, of course, doesn't become active in case we want to catch some trades here later. So you make sure that you activate the promo code Bulltober to get a 50% reduction on trading fees. I hope everybody has their coffee ready. So let's start talking here a bit about Bitcoin. I'm going to, of course, also answer your questions later again. And but first, I want to point out some things, especially on the Bitcoin chart, why I think at the moment it's a bit limited to the upside. So first of all, we've seen a great performance so far in October from Bitcoin and from most cryptocurrencies in the top 50, as a matter of fact. However, I still stand solid in my opinion that our potential to the north, let's say, let me put it like this, is a bit limited. You heard me talking about not only this week, also the weeks before that, but this area here between the 200 days moving average, which is this red line, and the resistance level here at 28,500 US dollars is very hard to overcome. So we have not only the 200 days moving average, which is always something the market eyes, of course, especially institutional investors look at this one a lot, which is currently at 28,000 US dollars. We also have a resistance at 28,500 US dollars. We have, as a matter of fact, also the 100 days moving average there at 28,115. So this is an area very, very hard for the market currently to overcome. And it would take either some sort of market phase with low liquidity. So maybe something we saw here on Sunday, where while I was sleeping here in Europe, we had this large green candle to the north, but also this candle stopped here exactly almost at the 200 days moving average. So if we don't get like super duper positive numbers today, I think we'll have a very hard time to overcome this. So I think the upside potential for Bitcoin today is a little bit limited. I hope, of course, that I'm wrong. Everybody here wants Bitcoin to go up, wants Ethereum to go up, or your other favorite cryptocurrencies. So there's more potential, though, to the downside. I also said I still don't want to completely rule out that before we enter this real bull market, then again, that we could see the Bitcoin price somewhere between 23,500 US dollars and 25,000 US dollars. So basically in this area down here. Excuse my crude drawing skills there. So this is also, by the way, one of the reasons why I decided today I do not want to do this community-based trading that we usually always do during events like this. Not only, of course, because of what I think is a limited upside potential. The limited upside potential, of course, just short term. Long term, as you guys know, I'm like super bullish when it comes to the next halving. I expect prices to be there somewhere between 40 and 50,000 US dollars. But the second reason I didn't want to do the community trading today is that these non-farm payrolls, this job market data we are going to see today, has a bit of a special flavor, in my opinion. Why does it have a bit of special flavor? Normally, you would always expect a pretty plain reaction, right? So let's take here the number. So non-farm payrolls means newly generated jobs outside of agriculture. And here on TradingView, if you don't know what something is, the number that's come out, you can always click it open and it will be explained to you. And you normally would expect, like, if this number, for example, is higher, let's say there are 200,000 or 250,000 newly created jobs, that this would be very positive for risk on assets. So positive for the stock markets. We would see the S&P 500 potentially go up. Potential, of course, also for cryptocurrencies. So maybe this would normally be the trigger that could drive Bitcoin above 28,500 US dollars, or let it at least close above the 200 days moving average. However, this time, this has a little bit of a special flavor because there is still something connected in the event that we are going to see in the beginning of November, which is the next interest rate decision of the Federal Reserve Bank in the USA. And if you have been listening to Jerome Powell talking a little bit, if you've been reading those FOMC statements also, you might have noticed that they say, yes, inflation has come down nicely since last year, that is. We are kind of approaching slowly our 2% target again. However, the job market is still much, much, much stronger than we would like to see it. And so under normal circumstances, you would always think, well, a strong job market, and by all means, the US unemployment rate being here at currently 3.8%, this is a great unemployment rate. That means if you are looking for a job, pardon me, currently in the USA, and you're not totally unqualified, there's a high chance that you can actually find a job. And the problem here is, however, that if there are a lot of newly generated jobs, if the unemployment rate is low, that means people have actually money in their pockets that they can spend for stuff like groceries, for rent, for gasoline, so travel, and so on and so forth, which then which heightens the chance of inflation becoming stronger again. So not going down to 2%, what the Fed would like to see, but maybe going back to 5% or 6% or even 7%. That's why Jerome Powell or all the members of the Fed committee, FOMC committee, have been saying over the course of the last months, really a half year already, we would like to see sorry, guys, I've been coming down with a flu a bit here. Weather is changing here in Germany. It's getting colder. I always get sick then. We would like to see the job market cool down in the USA, and this would then be the last piece of puzzle we would like to see, that we can say with confidence, we are not going to hike interest rates anymore this year, and maybe also not in 2024 anymore. So this is why it could be today, if this non-farm payrolls number is actually higher than expected, let's say it comes out at 190,000 or 200,000 or maybe even higher, that despite this normally being very positive for the stock markets, we could see lower stock markets. Maybe not in the first reaction, but in the reaction that we could see after, let's say, 10 minutes or 15 minutes or half hour. And because this is such a gamble, even more gamble than news trading already is, of course, that's why I decided, okay, you know what? Let's pause today for the community trading event. Let's do that again. I think next week we're going to see inflation data coming out, if I'm not mistaken. And then we're going to pick up upon this again. So if you want to trade this today, be aware of this. Be aware that if the number is higher, you could actually potentially see a negative reaction of the stock market. Doesn't make sense but if you think a little bit longer about it, because this is what the market wants to see. The market wants to hear, like, we are not going to raise the interest rates anymore. Interest rates are going to at least stay stable. And by all means, we are now for the 1st of November, when the next interest rate decision is going to be. At the moment, 81.5% of market participants are actually expecting that interest rates stay stable. And I'm very nosy if we see today a higher number, potentially a better than expected number in terms of non-farm payrolls, so more jobs being generated outside of agriculture than expected. If this number potentially would go down then to 75% or 70%, because then an interest rate increase is not going out the window. And there's, by the way, also actually a reason to expect this number to be higher. We saw 3 days ago, the JOLTS job opening, which is here, you can see this one here, which is all the positions in the USA that are open currently, that are not filled. And the forecast was here that there were 8.8 million jobs currently not filled, but the actual number came out at 9.61 million. So we have like 800,000 more jobs in the USA that are currently open, that are not filled than it was expected, which speaks like for a very strong job market, which speaks like for that if you are a skilled worker, if you are a skilled laborer, you have a high chance at the moment to find a new job in the job markets. And just because of this, I kind of have a feeling that we could see a stronger number today than 170K. Like I said, under normal circumstances, I would now have taken this and would have said, okay, I have a strong hinge here that the number is going to be better. I'm going to go at least long stocks, long the S&P 500, long Nasdaq. As I said, Bitcoin may be a little bit limited in the upside potential. We also see our Bitcoin decoupling a little bit from the stock markets, while the S&P 500 was going down. Cryptocurrencies actually were going up. And you see here, so this is this JOLT open job number I was just talking about, which came out higher than expected. What you can see, of course, is that since last year, it went down. Job openings became lower, and there's always also this kind of lightning pattern. Let me put it like this. By the way, look at the slump here we had during Corona. But it didn't didn't come down as hard as expected. And this kind of also feeds into what I've been entertaining now for over a year, the idea that once again, most market participants out there are kind of underestimating how strong the US economy is. If there's like one thing the USA is always better at, especially when comparing it to Europe, is they are better to get out of crisis. While here in Europe, we still discuss, especially in Germany. We tend to see everything like a bit pessimistic here. The US, people have more like a go-to attitude, all right, things are looking bleak, but, I'm going to put my sleeves up and then I'm going to get it. We're going to pull through it. America, America, USA, USA. And so this is something the USA, of course, is very famous for. Let's have a quick look here at some other assets as well. And of course, I'm going to look at the usual assets. So we're still going to look at the S&P 500 and euro dollar, of course. But I also want to point out two things. First of all, gold, horrible performance. And I've been telling this over and over again. There is absolutely no reason for me to trade gold on the long side, especially here over 2,000 US dollars. I've been saying this over and over again. Now we are, of course, slowly coming into territory here where we might actually see slowly a reaction to the other side, because this is a pretty good support here around 1,800. So if you are a precious metals trader, if you are a gold trader, this could be an area to look for some longs here. However, be aware also because we are also went pretty far away now from the 200 days moving average, which is at 1,927 at the moment. We're trading at 1,821. However, risky trade. Upside potential is around about 100 US dollars. You could put a stop here, let's say at 1,790. You still would have a great risk-reward ratio. However, it's not a trade. I don't like to trade gold very much that I'm looking for. But this is probably one of the first times you hear me speaking a little bit more fond about gold, seeing a little bit upside potential and not just being the one saying, gold is something I want to short, I don't like to trade gold. Another thing I want to point out here is the current yield for the US Treasury 10-year bond. So this is these 4.74% is what you get at the moment if you buy a 10-year US Treasury bond. Your yearly yield, your interest rate, so to say, your return on investment is 4.74%. And this is especially interesting because it, of course, went up. So this level we haven't seen since 2008. That was 15 years ago, but the last time we saw yields like this. It's even worse when you look at the 30-year Treasury note there. I think it's over 7.8% or something like this. And but why is that important? Because the higher this goes, first of all, this is a problem for people that are, for example, in retirement and that maybe are parking the cash, the money they need for living in those treasury bills. Because if you bought this one, let's say 2 years ago, or even 1 year ago, and you need to sell it yet, you are going to sell it with a loss currently. And which of course is bad, if that is retirement money you are depending on. The other side of the medal here also is the higher this yield is, the more conservative investors will become, especially institutional investors. If you run a pension fund, even if you run something like a hedge fund, where at least for large portions of the money that you are managing, you need to be a little bit conservative. You're going to think twice. Am I going to put this into the stock markets and I have maybe a risky average return of 8% per year? Or am I going to buy a 10-year treasury note and I get the safe 4.7 or 4.8% currently? So at the moment, because there's still a difference of over 3%, still makes sense to buy stocks. But the higher this gets, the more we will see people shifting out of the stock market into those treasury notes. As you know, I think this is only going to be maybe a little bit of a problem now in Q4 2023, which is probably still going to become very turbulent because we're going to see the effects of also the much higher interest rates that we see. If you're on debt right now, you need to refinance, and you need to refinance for, let's say, 5, 6, or 7 or 8% for a credit that used to be at 1 or 2%. You potentially run in a lot of trouble, not only if you own a house, not only if you have a consumer credit, but also if you are a company, especially. So we're going to see the effects on that for sure in the last quarter here of 2023. Just something that you need to keep in the back of your head. Yeah, this what we are seeing here on the bond market. This is also having a great effect. The bond market has a much higher trading volume, by the way, than the stock market. So it's for sure having a effect also on what we see going on with stocks. And if nobody's buying stocks, cryptocurrencies are also probably going to have a hard time because they are perceived as risk on assets as well. I see it's already 2:22. I'm already talking so much again. Last but not least, let's have a quick look here at the stock market and then see if we still have time for a question prior to the release or a couple of questions. Yeah, here also again, 200-day moving average acting as a nice support here. What I would like to see, actually, I would like to see, because the same situation, but just the other way around, actually, that we are seeing currently on Bitcoin. You also have this support here at roughly 4,180 to 4,200, and you have the moving average here, the 200 days moving average at 4,225. So this for me actually would be a great trade. Should we see, and we did this once before, but I was too slow to execute a trade today, like the stock market going into this area here between this support and the 200 days moving average, I might actually take the chance on a gamble on a swing trade long stocks, because I think the chances are higher than that we see a bounce back to 4,300, then that we immediately go down under 4,180. And again, here, this is also great risk reward ratio. If you, for example, buy exactly at 4,200, you have an upside potential of 100 points. Your downside potential, if you have your stop loss, let's say with 40 or 50 points, so at 4,150, let's say, you still have a risk reward ratio of 2 to 1, meaning you earn twice as much as you have to risk. And those are always the trades we are looking for as professional traders. Because if I always pick a ratio like this, I only need to be correct with 33% of my trades, of all my trades, and if to not lose money. So if I'm correct with 34% or 35%, which is a higher chance, you know, than a betting roulette on black or red on the colors, then I'm already going to earn money. So I can be correct below 50%. I'm still going to end up earning money. This is why I always say be patient, wait for things like this. As I said, like 2 days ago, I was kind of sleeping. I also didn't have a limit order ready. I don't want to work with a limit order also today because we don't know how the numbers are going to be, and there can be volatility spikes to both sides. So it could be that my limit buy order gets executed at 4,200, but the market goes down to 4,150. I get stopped out, and then the market goes up. That's why I tend to not have limit orders for swing trades. That is in place during news releases like this one. So 5 minutes to go. Let's have a quick look here at euro dollar. And as I said, also on Bulls, Bears, and Breakfast on Tuesday, I always like to look at euro dollar when I want to get an opinion about the US dollar, because looking at the US dollar index gives you the same idea. But since the euro makes up 50% of this index, also I might as well look at the more liquid pair, which is euro dollar. And you can see we kind of managed to go over this area here of 105. So this resistance has been broken already again, is support now. However, doesn't count much as a support or resistance in my opinion anyway. The more interesting fact here is that actually Also, we deviated largely here from the 200 days moving average, so I wouldn't be surprised to see a swing up to maybe 106, 107, potentially even all the way up to 108. Kind of a risky trade also. If you want to do this trade, make sure that you put your stop loss here somewhere in the area 104 to 104.30 maybe. Good. 4 minutes to go. I want to switch here, so we are going to watch the stock markets, I would say. I want to switch down to the 5-minute chart here because that's better to see. Let's have a quick look if we have some questions. Maybe first I need to drink something, otherwise I'm going to cough again. I'm going to pick the last question here from Huang Mehdi. What happens if the actual data and forecast are too different? If we see the actual data being very, very different from what the forecast is, we are going to have volatility because whenever the market, whenever something happens that the market is not expecting, you're going to have volatility. The question, of course, here is going to be, if that happens, are we going to see the volatility to the upside? Are we going to see it to the downside? This is, like I said in the beginning, something that puzzles me kind of today. That's why I chose, hey, let's not do the community trading today, because I'm not sure how the market would react to like positive numbers from the job market. And since this job openings that I was talking about earlier were already much, much higher than expected, I'm kind of afraid that we are going to see the same here from the non-farm payrolls today. And if that happens under normal circumstances, you would have upside volatility. You would see a strong job market. You would see a strong stock markets. You would see a strong cryptocurrency. So all the reasons to buy them, of course, or trade long positions. But because of this thought in the back of my head, but if we see a strong job markets, maybe we're going to see more interest rate hikes in the future. And I'm not the only one thinking this. Is like basically everything institutional traders are at the moment discussing. I was just talking to somebody from UBS this morning about this, and this is also what they are concerned about. And this is why I say let's better not trade this today, because if there's one rule in trading is if you are not sure about something, it's okay to stand at the sidelines. But if you have an opinion about what's going to happen, I don't want to keep you from trading it, of course. Just because I say it doesn't necessarily mean that I'm always correct with things, especially when it comes to something like news trading here. So we still have how long to go here? 50 seconds. I see you guys have a lot of questions. After the data is released, we're going to go through some of those questions. I'm not sure if we have like the event on Discord again, where you can post a screenshot of your question and then you can win some money for your trading account. So should this be the case, make sure you screenshot that and put it in the general channel there. And it doesn't matter if I answer your question or not. Important thing is that you ask the question here, of course. By the way, nice to see that we have a lot of people, 128 people that are with us here today. 15 seconds to go. So let's see. I'm going to open also the tab here for the non-farm payrolls. And then we'll see. I have the S&P 500 here. We could also switch to euro dollar later. And that's it. Number should be out now. Yeah, here, see. This is exactly the point now, you guys. You can see this. 336,000 newly generated jobs. So I was right with saying, like, I expect a higher number today. Excuse me, guys. And so forecast was 170,000. The real number, 336,000. So much higher, super strong job market. Unemployment is a bit worse than expected, but you can see how he immediately also, this is what I was afraid of, how the S&P 500 is reacting. We see this massive red candle, to the downside. I want to switch here also quickly back to Bitcoin. We are also seeing Bitcoin moving to the downside. Not too much volatility here, actually. I want to see also quickly here risk off, of course, euro dollar also to the downside now. Because it's exactly this happening what I was kind of afraid of, that we see actually a positive job market, a great job market, that we see kind of economy starting to boom again. But the market doesn't want to focus on this because now the market is afraid, oh, damn it, pardon my English, this could actually mean that the Federal Reserve is going to raise interest rates in the last quarter, maybe November, maybe in December, one more time. Interesting now here, of course, if I switch back to the daily chart, is that we are now kind of battling with this zone here I was talking about in the stock market. So right now, still the S&P 500 is respecting the 200 days moving average. Under normal circumstances, now this would be also for me a reason to go long, to buy a swing trade, but it's a risky swing trade. So if you want to do this, probably, you know what, we can do it actually with a small position here. We don't need to risk so much, of course. So I'm going here to CFD. I'm going to S&P 500. And we can trade a little position here of just 10 contracts. I have one-click trading activated. I want regular trading. And I'm just going to work here with a limit order at 4,200, like I said earlier. And of course, I need to place my stop loss then at 4,150 and my take profit at 4,300. As I said, you can see here projected loss would be $500. Projected profit, if this order gets executed, would be 1,000. So there is this risk reward ratio of 2-to-1. Going to send this order now. So now I have a limit order that you can see down here where I want to buy 10 contracts of the S&P 500 at 4,200 points. Risky trade, guys. But let's see how the market react. I wouldn't be surprised to see a bit more pressure here because this number was really, really extraordinary. So what I remember, I don't remember who asked the question just now, but this is exactly the event you were talking about. Number totally different than what the expectation was. So good thing here we were right with what we feared for became true. We feared that actually a better number, a strong number, would have a negative first effect on the stock markets, on risk, on assets, which is true. You can see here by the minute, the candle getting bigger and bigger. Let's switch here back to the 5-minute chart. For the 5-minute chart, it looks crazy, no? If you zoom out a little bit or go back to the daily, it doesn't look that bad. But let's see here, if we really go all the way down to 4,200, if we deflect off the zone now to the north side, so if later you see buying going on, in my opinion, that would be an extremely bullish sign, actually. But let's see. First, we need to defend 4,200. And at the moment, there for sure is a lot of selling pressure on the market. Euro dollar also, I want to switch back here to the daily chart. Exactly trading at the area, which is area of support now, 105. Don't want to touch that here at the moment because also here, this is a classic risk-off scenario we are seeing. Bitcoin still doing okay out of all the assets, the most okay. Yeah, also 10 trending a little bit down, but it's not too bad. You know what we see here. I mean, we traded before at 727,690, so we fall $190 US. This is not a lot of volatility for Bitcoin for today. We are still in green numbers here, but let's see if the pressure is picking up there as well. What I want to look here at the moment really is I want to see the stock market. And could also, of course, be now that we had the right idea in trade, but that we don't get executed. That's okay. You know, it's always important that you make a plan prior to executing your trade. All right, let's maybe have the markets a little bit here in the background again, and let's talk about one or two more questions. 150 people now here today. Welcome, everybody. I think this is one of the most popular live streams we've done in a long time. Yeah, I'm just going to randomly pick here Two more questions, maybe. This is a nice question. Claribots Saumo. I always say that I hope I'm pronouncing your name correctly, but you see your question, so you know I want to answer your question. And he or she is asking, what indicators can you advise me for these markets? So clearly, if you want to do news trading, indicators become worthless pretty much. And if you are, for example, a scalper or day trader, what I advise you to do is maybe half hour before the news come out and half hour to an hour after news came out, especially when they were unexpected, like what we are seeing right now today, you should not use indicators at all, because the indicators are going to be messed up a little bit. You can see this, for example, here, this green and red line here on the chart. These are Bollinger Bands that I'm using, and I use those normally also for trading positions when I, for example, trade with my sniper trading system. But I tend to not look at those, at least for day trading, shortly before and a longer time after the news release, until the data has normalized, because indicators are nothing else than another way to display price data, right? And if a price data is a bit messed up right now, the indicators are not going to tell me something like this. I know there are traders out there that like to work in terms of news trading with an indicator called the average true range. And this is okay. However, I never found for me quite the trading strategy where I can say with confidence, hey, this is what I want to trade. This is what I want to use for news trading. Outside of news trading events, my advice always is try first to work with trend following indicators. So moving averages and areas of support and resistance. If you have nailed this down, working with moving averages, working with areas of support and resistance, pretty much, like what I showed here in the beginning of this video for Bitcoin. This is nothing else than working with support and resistance and moving averages, the 200-day moving average, 100-day moving average, and the resistance level here, 28,500 US dollars. That's why I said, I think upside potential, at least for the moment, short term, is a bit limited for Bitcoin. All right. Next question. Nail biting. Yeah, really. Question here from Maoli Oliveira. What days and times do you recommend I best operate this market? Sorry. I can see it as much more stable than cryptocurrencies at the moment. And I really want to know what you recommend, Dirk. Here it also depends. If you are talking more about short-term trading, so let's say day trading, scalping the markets, and so on and so forth, and especially for Forex and for the stock markets, S&P 500, or maybe you want to trade other indices, but it always boils down that they usually copy what the US stock markets are doing. Normally, Tuesdays, Wednesdays, and Thursdays are the best days to day trade. Why? Because on Monday, you're usually seeing a lot of repositioning from the week before that. And on Friday, you see the contrary. You see a lot of institutional traders sooner or later closing their positioning because they don't want to hold positions over the weekend, over 2 days where there's no trading going on. Because other than the cryptocurrency markets, the stock market, the Forex market are not trading on Saturday and Sunday. We have, of course, for cryptocurrencies, the luxury, what we have 24 hours a day, 7 days a week, and 365 or 66 days per year trading going on. But if you look more, and I hope I interpret your question correct here, more looking like, hey, when are the best times for day trading, scalping, swing trading a little bit the markets, try to concentrate on Tuesday, Wednesdays, and Thursdays. Yeah, that's a good tip here. Thank you. You can always see I'm going to try this actually. So if I go to 1, okay. Nice tip, thanks. Awesome. I didn't know that. See, I learned something again. I'm a bit old-fashioned. You can see always that I'm a little bit senior already, or on the older side, that I use my mouse for everything. Good tip. Learn something new today when it comes for training. Thanks a lot, Skydive. So one more question, and then we are going to call it a day for today. And pretty knows already how the inflation data is going to come out. It's going to be a wild next week for sure. Scrolling through here because, of course, I want the question to be something that we haven't talked about maybe. We talked about gold already. Yeah, a lot of questions I see also again here about where do I think the crypto markets are going, and and maybe I close with this. I'm not going to show a specific question on this, but I see a lot of you guys are requesting again to share what I expect for the next months for the cryptocurrency markets. And I'll say that again. I've been saying it for a year now, for over a year. I'm very bullish for the cryptocurrency markets. The closer we are getting to the halving, the more bullish I become. The only thing that is kind of in the back of my head is that we have this, maybe I want to not to call it actually debt crisis, but there could be a debt problem in Q4, maybe even Q1 of 2024 for the US markets, where potentially we could see some downside volatility again for the stock markets, and then of course also for the cryptocurrency markets. That's why I said I don't want to rule out short midterm that we still are going to see something like 23.5 to 25,000 in Bitcoin as a price. However, for next year, what I'm expecting April, May, June, around that time, that we are going to see the Fed lowering interest rates again. And this is going to nicely coincident then with the halving of Bitcoin, which is going to be probably late of April 2024, which then is going to initiate the next bull run. I'm very, very sure of this. And then if there's no black swan event happening, and quite honestly, there are only not many things that could be worse than what we saw in 2020 with what was the name again? Corona surfacing, where basically the whole world was in a lockdown. What could be worse than this? Okay, World War III or whatever. But if that happens, I think the last thing we're going to care about is probably cryptocurrencies. We're probably all going to care then about finding the next nuclear bomb shelter and surviving on, I don't know, rats or whatever we can scavenge. But, as if I want to bet on something like this, well, then I can stop trading and investing all together. For me, like one of the things I've learned in those 25 years, and I learned it the very hard way also many, many times over and over again, is to kind of try to see the positive things in negative outlooks. There are so many people, for example, on social media always bashing the Jerome Powell or politicians and so on and so forth, like in a way like, oh, they are so stupid. Why don't they see what I see? They are very short-minded. They are not not all politicians, but at least for the people that are, for example, running the central bank in the USA, they are very smart people, potentially smarter than we are, or at least than I am. And you kind of have to give them leeway that what they are doing in a good way. Sometimes they are only humans, of course. They react too slow. We saw that also when they misjudged how severe inflation would come, but they reacted. They reacted by raising the interest rates. And if there's this crisis looming because of a debt problem potentially in the USA, they are going to react to this again. And maybe they are going to react the same way they did it with COVID, that they are going to lower interest rates down to 4%, 3%, 2%, or maybe even 1% again. Pretty sure that is going to happen. We'll see how things are going out, but like if I have to summarize it, there's a bit of downside potential still, but I wouldn't bet my life on it. long term. So I'm pretty sure if we sit together here in 2 years again, 2025, October 2025, but we are going to look back and say like, wow, that was the super bull market. And I'm happy I didn't miss out on it. All right, let that be my closing words for today. Thank you everybody for joining. It was very much fun. You know, always a lot of fun to see so many questions, so many people being also being as enthusiastic as I am for trading, about trading. Leave us a like, subscribe to the channel. Beneath the video, you'll find also links if you want to become a client of Prime XPT to open an account. That way you can support the Trading Academy when, of course, not earning money from that. But of course, this will help us to continue this project again. I'm going to see you guys latest next week again, Tuesdays. Always remember bulls, bears, and breakfast. And then I'm not sure if already next week we are going to see inflation data coming out also. If not next week, the week after this. If that should be the case, I'm going to put out another new video, probably finally one on the US debt crisis next week as well. Take care, everybody. Always use the stop loss and happy investing. Bye.